Good morning. We will pay attention to the ledger accounts that's used for companies. The first information that they give us is the authorized share capital is 800,000 ordinary shares. So that is the maximum amount of shares that this company can issue. It's not necessary that they must issue all of it. They can only issue part of the ordinary shares. The ordinary share that's authorized will never be recorded in a ledger account or in any calculations. The only place where we will ever use this is in the note for capital to indicate what is the maximum number of shares they can issue, and then we will compare it to the amount that was already issued so that we can see how many can still be issued in the future. Okay, then they give us the opening balances at the end of the previous year. So it means that they say there that we've issued 250,000 at 2 rand. So I will show here the balance is 500,000 rand. I will indicate the 250,000 times 2 because I need this information for calculations. Okay, then they give us the retained income. Retained income forms part of your equity, so the capital and the retained income is your equity. Retained income is the part of the profits that was not paid out to the shareholders, so the company retains some of the profit for future expansion or if there's a bad economic year. SARS has a debit balance of 3,400, so we will indicate the balance on the debit side. So the previous year we paid too much provisional tax to SARS, and SARS actually owes the business 3,400. So if this balance is on the debit side, it is an asset because it's money that will come back to the business. The shareholders for dividends is 25,000. Shareholders for dividends is a liability because we owe that money to them. So it means it's the dividends that was declared at the end of the previous year but was not paid in time. So we owed it at the end of the year, and then you will see on the 10th of March they say we pay this outstanding amount. So we will debit shareholders for dividends to indicate that we paid the outstanding amount. Okay, so we will always start with our balances first of all, and then we will work through all the additional entries. Okay, a company offered 200,000 ordinary shares at 2.20 rand. This is only offered. So it means nothing happened. I told someone I've got something to sell. And we offer it to the public for subscription on the 1st of April. We say that we want to sell 200,000 shares. The closing date for the applications is the 1st of May. So the time when something will actually happen will be on the 1st of May when we receive the application forms with the money, and then we can only record an entry. So if you look here, receive applications for 200,000 shares, then we go back at what price was it issued, 2.20 rand. So we will indicate that our capital will increase on May the 1st with 440,000 rand. We issued 200,000 shares at 2.20 rand. So now my capital is 940,000 rand. On the 1st of August, they offered 100,000 again at 2.40 rand. The subscription final date is the 1st of September. So at this stage, I still don't do anything because I still have to get the applications with the money. Okay, on the 30th of August, the directors declared an interim dividend of 10 cents per share. Now, dividends is the portion of the profits that's paid out to the shareholders. And depending on how many shares they have, will be calculated to see what profits they will get. So the interim dividend is 10 cents per share. If I have 100,000 shares, they will multiply it with 10 cents and they will give me 10,000 rand. If you have 200,000 shares times 10 cents, so you will get 20,000 rand of the profits. So the interim dividend is the amount that is declared in the middle of the year. This is on all the issued shares. So if we look at this, how many shares did we already issue? 250 and 200,000. So we've already issued 450,000 shares times 10 cents gives me 45,000 rand. So the interim dividend that must be paid to the shareholders will be 45,000 rand. So I will go and debit my ordinary share dividend account to indicate that the expense for the business in the middle of the year is 45,000. The date that this dividend was declared was on the 30th of August. So August the 30th, we must pay this money to the shareholders. So we will indicate that the shareholders' account will be credited. And why do we credit them? Because we owe dividends to them. So on August the 30th, we will show that we debited the ordinary share dividends account. And the business now owes 45,000 rand to the shareholders. Okay, so this is the expense for the business. We have to pay the money to the shareholders. So we say the shareholders is like a creditor, it's a liability. Why do we owe them money? Dividends. Okay, then on the 31st, they say we will pay this interim dividend. So it means on August the 31st, we will show that the shareholders' account will decrease with the amount that we pay, and we will pay them 45,000. Now we don't owe any more money to the shareholders. Okay. Then on 31st of August, the accountant calculated that the company had to pay 37,500 provisional tax to SARS, and EFT was issued. So we normally pay 3 amounts to SARS during the year. The first amount is if we owe them money that was not paid in the previous year, it will be paid at the beginning of the year. Then in the middle of the year, we have to do a calculation, subtract the expenses from the income and see what is the profit for the middle of the year and calculate 28%. And then we send them that money and we call that provisional tax payments. So 37,500 was sent to SARS on August the 31st. The bank was credited because we paid the money. Now remember, you're not allowed to write in your income tax account until the end of the year. After the final profit was calculated, the auditors were satisfied and SARS calculated the actual income tax for the year. The provisional tax payments are paid to SARS to indicate that we pay part of this liability that we owe them on the profits that we make. On the 1st of September, they receive applications for 100,000. Now, do you remember that we issued the number 4 and number 8 will go together, because in number 4 on the 1st of August, we offered 100,000. The closing date was the 1st of September. and now we receive 100,000. So we must go back to number 4 to see what was the price at which those shares will be issued. So 100,000 times R2.40. Okay, and that is on September the 1st, and we received 240,000 rand. So it means at this stage we we've already issued 550,000 shares. Okay, then on the 28th of February, the accountant issued a second provisional tax payment of 39,500. That is on February the 28th that we pay money, provisional tax to SARS again, and we pay them 39,500. 39,500. Okay. On 28 February, the directors declared a dividend of 20 cents per share. Okay, so now we have to determine how many shares we've got. We already had 250 plus 200, 400, then another one, 550. So we will work out the dividend will be on 550,000, and it will be 20 cents. So it means our dividend, final dividend, will be 110,000 rand. So this is why I wrote this on the side, so that I can see immediately how many shares were there, and I can use my capital amount to see what is the value. So the dividends that we declare now is 110,000. So we will debit our ordinary share dividends account on February the 28th and indicate that we still owe this money to the shareholders, 110, and we will credit the shareholders on February the 28th. Ordinary share dividends was debited with 110,000. Now, if you look at these two, you will see that there's a difference. When we declared the interim dividend, we paid that amount immediately. So interim dividend is always paid immediately. The final dividend, we always owe money to the shareholders that will be paid at the beginning of the next year. Okay, then they say on 28 February, the directors decided to buy back 100,000 ordinary shares at R2.40. Okay, so we want to buy back 100,000 at R2.40. So the money that will go out of the bank will be 240,000 rand. Okay, then I have to go and look what is the average price, because I can't take out more in the capital account that I've put into it. So if I calculate the average price, it means that this total amount of money is 1180 divided by the number of shares, and that is 550,000 shares. So I just add my capital, I add my number of shares, and I divide it, and I say the average price is R2.15. Okay, so that means the amount that will go to the ordinary share capital account will be 100,000 times R2.15 will give me 215,000. So what is more than the average price, I will take that money out of retained income. In this case, it's 25 cents. So I will take out 25,000 rand. Okay. So I will have to debit my capital account with the average price on February the 28th, and I will show that the bank is credited with 215,000. The amount that's more than the average price, I will take out of retained income on February the 28th. And the reason why the business is prepared to pay more than the average price is that the capital and the retained income is your equity. So this 140,000 actually belongs to the shareholders. It was not paid out to them as profit, so it was kept back in the business. Okay, the profit for the year was 310. So we will have a trading account where we will calculate the gross profit. Then we will have a profit and loss account where we will determine the net profit. And then I will take the net profit to the appropriation account to determine how will I divide that money. Okay, so my dividends that I declared during the year was the 45 plus the 110, so it's 155,000. This must be paid out of the profits, so I will take this to my appropriation account. Okay, so on February the 28th, I will show ordinary share dividends. The total amount that's given to the owners as part of the profit is 155,000. Okay, then they say that the profit is 310 and we have to pay 28% on it. So on the 310,000, I have to calculate 28% that I must give to SARS, and that is 86,800. So income tax will be debited with 86,800. Now I know my final tax for the year, so I'm allowed to write in the income tax account, I owe this money to SARS for what? Income tax. Remember, we have tax VAT and we have income tax and we have pay as you earn. So there's 3 types of tax that we have to pay to SARS, and that's why we always indicate in brackets what type of tax are we talking about here that is owed to SARS. And I will take that total amount, the 155,000, to the income tax is 86,800, and I will take that 86,800 to SARS to indicate that is the total amount that we owe them. February the 28th, income tax. Okay, then we've done all the different entries, and we will close off our income tax account and say that part of the profits will be paid to SARS as income tax. So I will transfer this income tax to the appropriation account, 86,800, and that is for the income tax. Okay, in my retained income account, I've had 140 at the end of the previous year. I used 25 for the repurchase, so there's another 115,000 left over. And that will now go to my appropriation account to indicate that I've got more money available to divide between SARS and the shareholders if I need it. So it means that the retained income of the previous year that's left over is transferred to the appropriation account, and then the amount that we've got available to divide is actually 425. We already calculated how much, so it means that we will now go and balance this account to see how much of that profit was left over. My totals are 425,000, and if I subtract the 155 and the 86, there's a difference of 183,200, and that I will take to my retained income account to show that is the income that is kept back in the business at the end of the year. So this retained income account, when we transfer it to the appropriation account, we must close this account and show that the totals on both sides is 140,000. And then this profit that we retain here will go to the retained account on the credit side, 183,200 on February the 28th, and this comes from the appropriation account. Then you will just go and balance your ordinary share capital account to see what is the balancing figure, and that is 965,000. And my totals on both sides is 118. And I will bring down on March the 1st the balance as 965,000. So this is the amount that will go in the balance sheet as equity. The amount at the end of the year will go to the balance sheet as equity. If I look at my SARS income tax account and I balance this account, the totals on both sides will be 86,800. So we didn't pay enough, and that means that we still owe SARS at the end of the year 6,400. And we will bring down that balance on the credit side at the beginning of the next year, 6,400. So this will go in the balance sheet under current liabilities. Okay, if we balance the shareholders for dividends account, my total on both sides is 180,000. So the difference between the debit and the credit side is 110,000, and that is the balance that I will carry down to the next financial year. $110,000. So we still owe the shareholders that final dividend. So your closing balance will always equal the final dividend, and this will go to the balance sheet as current liabilities. Okay, the income tax and the ordinary share dividends was expenses. So we just closed it off and we transferred it to the appropriation account. And that is all the entries that you have to do in the ledger. I hope you understand this better. The reason why a lot of students have problems with companies is because it's words that we don't normally use. You are used to the word capital in sole traders and in partnerships. This is the same capital. The only difference is in a company they can issue ordinary shares and preference shares. So you have to indicate what type of share was issued to provide the capital. Retained income means that a certain amount of the total income that they had in the business was kept back in the business, so it was retained in the business. SARS income tax, we have to show what type of tax, so we will have an account for SARS income tax, SARS VAT, SARS pay as you earn. Shareholders are creditors because we owe them money. Why do we owe the money to the shareholders? For dividends. Okay, income tax is my expense account. Ordinary share dividends is the dividends that we pay to the shareholders on all the ordinary shares that was already issued, and this is the amount that they will get out of the profits on the total number of shares that belong to them. Good luck for the exam, and I hope it's going to be very successful.